We're talking about activity-based costing systems, and we're talking about just-in-time. Now, when the just-in-time philosophy came into being, all of a sudden, when we started eliminating that waste, we took a look at accounting. And we said, you know, we make a whole lot of journal entries under the traditional approach. We know that when we're looking at our material inventory account, it might have a beginning balance. We debit it when we buy it. It might have an ending balance, and we credit it when it's used. And when it's used, the direct materials goes over into work in process, doesn't it? Direct labor joins it. Overhead is here as well. We can have a beginning balance, and we can have an end. When it's completed, we get cost of goods manufactured, which goes into finished goods as cost of goods manufactured, joined with beginning balance, ending balance, cost of goods sold, leaves finished goods, goes into the cost of goods sold account. There's a whole lot of journal entries going on here, isn't there? Well, if our production process says that we want to eliminate inventory, in other words, we're not going to buy materials until it's in work in process, and it doesn't take me very long to make product anymore. Why? Because we have automated systems, and so we don't have very much labor anymore. It's just all machines. And we don't really need finished goods, because why? We don't make it unless somebody wants it, so it's sold. So why am I making all these journal entries? Couldn't I get rid of half of the accountants and the transactions that I'm making if I applied just in time to accounting? And that's what they did. They came up with something called backflushing. So when we're in a just-in-time system, we backflush. And the reason it's called backflushing is this, and this is why I could not tell you about this until after the first test, because wasn't the first test a whole lot on the traditional way of accounting for costs. So now, when we're in an activity-based system, this is how it works. Since I don't buy materials or let the labor work until the product is wanted by the customer, all of our costs will go directly into cost of goods sold. So now I'll look at my cost of goods sold account, and I'll see direct materials, direct labor, and overhead, whether that's actual overhead or applied overhead. Notice I eliminate all those issues about overhead, because you don't make it unless it's sold. So everything goes into cost of goods sold, and that's how we do every single day of the period. Now, at the end of the period, we might have a bit of finished goods, and we might have a bit of work in process, and this is how it works. If I go out to the loading dock and say, you know, has UPS picked up the last shipment for today, or whoever your shipper is? And they say, yeah, and you say, well, what are those packages over there that are yet to be shipped out? And they say, oh, that's for so-and-so, and it contains the following. So because I have this bill of activities, do I know what the cost is of those goods that are on my loading dock? They're ready to be shipped, so the title hasn't passed yet. Oh, so those are finished goods. So anything that's on the loading dock last day of the year after the last pickup is finished goods. And since you know what that cost is, I can flush it back out of cost of goods sold and into finished goods. And when I flush it back, it's debit finished goods, credit cost of goods sold, and that's the amount of the ending balance in finished goods. Likewise, I go to my factory or my production area, and I walk around as everybody's quitting work on the last day of the year and say, hey, what you working on? You're working late tonight. Isn't it the last day of the year? Happy New Year's Eve. What are you working on? And they say, oh, I'm working on this, and here's my bill of activities. Here's what I've incurred so far. And you say, oh my goodness, isn't that ending inventory and work in process? So I don't have to sit there and think about FIFO, LIFO, average cost, production reports, or anything, because do I know what my work in process ending balance is also just by taking a walk through the factory last day of the year? Again, I'm going to flush it back by debiting work in process and crediting cost of goods sold. And that's that simple. Isn't that fabulous? Back flushing.